Welcome back. How important is your credit score and your credit history when you decide to buy a home? This is going to be a two-part HomeWise segment. We will start with part one today, basically just getting you familiar with the idea of what is credit. Joining me now is mortgage expert Tyler Osby. So Tyler, let's start out with that question. What is credit?
Well, credit is really intended to determine how likely someone is to pay debt back when they borrow it.
It's basically kind of shows you past behavior using things like credit cards and getting loans. Why do you need credit when you go to buy a house?
Well, because when they're going to give you a lot of money, they want to know they're going to get it back.
Right.
And your history of paying stuff back is a really good indication on if they can count on you paying it back when they lend a bunch of money for you to be able to buy a house.
Makes perfect sense. Let's talk a little bit more about credit reports specifically, and that's behind garage door number 2. So what all do these credit reports have in them when a mortgage lender goes to look at them?
It's a lot of information. It's everything from like what you've recently done, so credit inquiries, that kind of thing, but also like, payment history on all the debt that you've ever had. So credit card payments, auto loan payments, anybody that you haven't paid that went to collection, that sort of thing.
Okay.
And then it'll also give you an idea of what the balances are and the payments are on all of those debts, which are also all very important to the loan process. What I think a lot of people don't know is what's not included though, because a lot of people think things like their employment or their income has some kind of impact on credit score. You could be dead broke and have an 800 credit score, just as long as you paid your bills on time, right? And then also things like your utility bills aren't on there. Oftentimes your rent history isn't on there. So it's a good picture, but it's not a whole picture, but it's the picture we look at.
And let's talk about that with garage door number 3. What specifically are mortgage lenders like yourself looking for when you are looking at and analyzing somebody's credit report?
Yeah, well, different loans have different minimum credit scores, so that's one piece. The credit history within that is also really important because if someone has trouble paying certain bills, it might be an indicator that they would have trouble paying a mortgage, right? And then also derogatory items like collections and that sort of thing can play a role in the underwriting process. But the utilization piece is something where your credit score is determined oftentimes based on how you've used it in the past, and something as simple as credit cards and how you've utilized them can have a really big impact, which I know we're planning on covering in a future segment.
Yes, that's a good segue. Part 2 next week is we're going to dive a little deeper into this topic. Before we close out on part 1, there is a way that people can get a credit report without applying for a mortgage loan or any loan. How is that?
Well, so first off, just know that it's data and everybody uses their own different algorithm. So some of what we pay for in the mortgage industry is the mortgage specific algorithm, right? But to get the data of your payment history and all that and what's reporting, freeannualcreditreport.com.
Okay, Tyler, thank you so much. If you'd like to share what you've learned here today or maybe check out some other HomeWise topics, be sure to visit who13.com and search HomeWise. We'll be right back.